welcome to everyone that has joined the fees workshop. On behalf of the Board of Environmental Safety, I'm going to first go over some housekeeping items while everyone is joining us. So on the first slide that we see here, you'll see our meeting materials for this event, which will be posted at dtsc.ca.gov/fees-events, and also at our BES website, at the board's website. You can also find a recording here of a previous joint workshop hosted by BES and DTSC from April 26th. And these, there will be some more helpful links on the board's authority on fee rate settings and DTSC fee payer resources, which can be found at bes.dtsc.ca.gov/next-meeting, as you can see here, and those will be shared into the chat. For the Zoom webinar logistics, by participating in this event, you understand that this workshop is being recorded and will be posted online in the coming days. If you'd like to use closed captioning, you may manage your preferences by using the More menu and choosing to show or hide the closed captions. All participants will remain muted, and the only videos or screens shared will be of the facilitator and presenters. To participate in today's workshop, you may submit your questions and comments using the Q&A function on Zoom, or you can contact us at besinfo@bes.dtsc.ca.gov, and that will be entered into the chat as well. We'll do our best to get to as many questions as time allows at the end of the presentations, but if your question does not get answered, please contact us via email and we will respond to you. And please note, rather than submitting a question anonymously, please again email us if you wish to get a response. And the chat function is enabled. However, we ask that you only use it if you need technical assistance from our meeting facilitators to improve your Zoom experience today. If you have any questions for our presenters through the chat feature, meeting facilitator will ask you to resubmit your question through the Q&A chat function so that it will be included in the Zoom recording. All right, next slide, please. So without further ado, my name is Evelyn Nuno, the board specialist with the Board of Environmental Safety, and I'll be the facilitator for today's event. I would also like to note that Aaron Gale, who is also a board specialist with the board, will be assisting with adding resources in the chat for us. Today's presenters include Sushma Bhatia, board member with the Board of Environmental Safety, Swati Sharma, executive officer for the Board of Environmental Safety. Representing DTSC's Office of Financial Planning, we are joined by Brian Brown, the Chief Financial Officer, and Catherine Grant, the Fiscal Policy and Process Improvement Manager. Next slide. As a reminder, the BES Fees Subcommittee is hosting this virtual workshop, and the subcommittee members include the board chair, Jeannie Rizzo, board member Sushma Bhatia, including the BES staff support, the executive officer, Swati Sharma, senior board staff engineer, Linda Ocampo, public outreach manager, Sheena Brooks, and our board counsel, Greg Forrest. And this concludes the introductory review for today's event. I will now hand it over to board member Bhatia to get us started on the agenda for today and her presentation. Next slide.
Thank you, Evelyn, and thank you all for joining us today. I'm here representing the Fees Subcommittee to talk to you about fees. So let's kick off with the purpose of the workshop. As most of you know, we are building on our past workshops and our past memos to share with you the latest information we have on all of the factors that will influence fee rates for the next fiscal year. So we're going to start sharing those with you. More specifically, we will start talking about something called a May revise. For those of you that are unfamiliar with May revise, it is a budget proposal released by the administration. This May revise has implications to DTSC's budget, which is why it's relevant to the fee discussion today. Next, we will talk about something called a fund condition statement. A fund condition statement provides a holistic view of the health of each of the funds that DTSC maintains. You will hear more about how the fees collected are deposited into these funds, and those funds in these fund categories are used to fund various programs that DTSC runs. So we will speak about what the health of this fund condition statement is at the moment. And then we will walk you through the board's overall process and the timeline for making a decision on fees. We will present some specific scenarios that the fee subcommittee is currently developing. Know that the fee scenarios we are presenting today are preliminary. They're based on a certain set of assumptions. We will have more information that will continue to come in through the end of the fiscal year, and we will continue to refine those scenarios. But today we intend to give you a sense of those scenarios and our potential direction of travel. We will also have time for questions at the end. Next slide. Okay, one more. So we want to start at the very beginning. You've heard us say this before, but it's kind of worth reminding all of us why we are here today. We are here today because we as a board have the fiduciary responsibility to keep DTSC solvent. And this is mandated by SB 158, which is also called the Reform Bill. In addition to 158, when the board was established, we adopted our operating plan, which outlines our principles. And in the operating plan, we have spoken about transparency and accountability being a key principle of operation. So we're hosting this workshop for the sake of transparency so that you, as our stakeholder community, know what information we have today and what information we are considering as we make decisions related to fees. Again, this is preliminary information. Things will continue to evolve through the end of the fiscal. Next slide. Talking a little bit more specifically about fees, the fees were modified through this reform bill or SB 158 that I referred to earlier. The new rates kicked in last year. So that was the first year that ratepayers saw a fee change. You also know that the fees were kept flat last year, which means that we did not institute any cost of living adjustments, also called COLA increases, last year. But because of our mandate to set fees, we are working closely with DTSC's finance department to monitor the revenues being collected, because ultimately we want to collectively ensure that DTSC has enough funds to remain solvent, which means it has enough funds to keep operating its programs. Next slide. This is some information you've also heard about previously. I'm reminding us that there are 3 different fee types. These are fee types that will be referenced in the fund condition statements that DTSC team will share later in the workshop today. So just a reminder that there are 3 different fee types. There is G&H fee, also called generation and handling fee. The G&H is a short form for generation and handling fee. Second is the facility fee, and third is the environmental fee. These fees are collected by CDTFA. That's another acronym, but CDTFA stands for California Department of Tax and Fee Administration. It is another state department that's collecting fees on behalf of DTSC. Next slide. So all of the fees collected are deposited into these accounts. They are deposited into the hazardous waste control account, or the hazardous waste facility account, or the TOSCA account, which is Toxic Substances Control account. This might seem like too much information, but the reason I'm sharing this with you is to anchor you on the presentation that DTSC will make later in the workshop about what is the health of these funds. Next slide. Okay, so now we're going to talk about, with this context in mind of 3 different fees being deposited in these funds, what are the factors that the board will consider or will need to consider when making decisions related to fees. So starting at the very beginning, or top of this list, the appropriated amounts. Appropriated amounts are set by the legislature. It reflects the amount of funding DTSC requires to run its programs and to deliver on its mandate. So this is a really critical number for us to consider. Number 2 is we have to make sure there's enough funding to allow for fee collection, to administer and to collect the fees. So that's number 2. Number 3, I referenced cost of living adjustments earlier. This is critical because the cost of living adjustments have to ideally be made every year. But last year we kept the fee rates flat, which means we did not make any cost of living adjustments in the past year. The next bullet here is about prudent reserves. It is important for us to build a reserve for unforeseen situations where there may be shortfalls. A shortfall means a gap in the appropriated funds and the actual revenues collected by DTSC, right? So if there's a gap in the amount DTSC requires to run its programs and what it actually has, that's a shortfall. The shortfalls can happen sometimes due to economic uncertainties and different sort of choppiness of the fees that come in. And as a board, we want to ensure that there is a prudent reserve to tide us over those situations. The last sub-bullet is a really critical one, which is repayment of past loans. It is important for us to keep in mind any outstanding loans, especially as we think about what is the adequate or prudent reserve we need to build to start repaying any existing loans. So this begs the question of what is the state of outstanding loans that DTSC has today. So today there is one $55 million loan that DTSC was provided last year to address the generation and handling fee shortfall. This loan was intended to support with the shortfalls from last year, as well as to support with shortfalls that were projected for this year. So that's the good news, is $55 million loan to address last year's shortfall and to some degree this year's shortfall. But we do need to repay this loan, and you will hear a little bit more about loan repayment also later in this workshop. Next slide. All right, so far we have spoken about all of the factors we need to consider on a yearly basis as we think about the appropriate fees. In addition to those considerations, some things that are specific to this year are, we already know that there is a generation and handling fee revenue shortfall. We'll talk about what exactly that shortfall is in the next slide, but we are operating with this information knowing that there is a shortfall for this year. I earlier introduced the concept of May Revise. May Revise is critical because it includes some proposals to begin to address this shortfall. So by addressing the shortfall, I mean there are some specific provisions that allow us to reduce the shortfall above and beyond what might be created if we continue to operate in the business as usual mode. So to give you some examples, there is an provision in the May Revise that provides more funding to CDTFA to conduct audits and increase our compliance rates with fees. So we expect that will help impact the revenues that come in and then eventually impact fee rates that we set. Similarly, there's also a provision that clarifies how exemptions are intended to work. This will ultimately reduce the maybe number of businesses that are inadvertently self-exempting themselves. So all of these are part of the May Revise, and you'll hear more about May Revise when DTSC presents. The second aspect here is correction of structural deficit. So all of this is to say that we know we had a shortfall last year in the generation and handling fee revenues. And this is what necessitated the loan that was provided to DTSC. We have a shortfall this year, and we're already projecting a shortfall in G&H revenues for next year. So this is telling us that there's a structural deficit issue with ongoing shortfalls coming in, and something that we need to find a way to address as we think about fee rates. All right, we're now going to share a little bit more about the structural deficits. Next slide. Okay, so this is a table that is intended to show a view of the gap in the projected revenue versus actual revenue collected or revenues estimated to be collected. Okay, so that's what this table is. It is 2022-23 is last fiscal year's information. 23-24 is this fiscal year's information, and then we have 24-25. That's the next year projection. So you'll see here, the key takeaway here is SB 158 projections are the revenues that we were expecting to collect and expecting to have to ensure that DTSC is able to run the programs. But the estimated revenues row talks about, for last year it was actual revenues, but for this year and next year it's estimated revenues. It gives us a sense of where we think we're actually going to land in terms of the G&H fees coming in. So the takeaway from this slide is the numbers in red, which is that there's a pattern of shortfalls. And as a board, we have to ultimately ensure that we have a sustainable funding model with a reasonably high degree of confidence that DTSC will have funding to continue its programs and meet its mandate. And we have to find a way to address this sort of ongoing structural deficit issue. We also have to, as I mentioned earlier, ensure that there is a prudent reserve to protect us against future uncertainties that may lead to future shortfalls. So just to recap, we have to make sure we find a way to address past shortfalls and loans taken to address those shortfalls. We have to correct any structural issues that create shortfalls in the future, and we have to ensure that there's a prudent reserve. So those are the key takeaways from the information I've shared so far. With this, I'd like to hand it over to DTSC to give us more specifics on the May revise and something called a trailer bill. The trailer bill is actually referenced in this slide as well. You see a footnote that says TBL. TBL stands for trailer bill. The data that we're presenting in this slide for 24-25 assumes that the trailer bill will pass and we will end up with a shortfall of roughly $28 million with the passage of the trailer bill. If it does not pass, these numbers will no longer be valid and we anticipate a much higher shortfall. So with that, I'm going to hand it over to Kate from the DTSC team.
Thank you, Sushma. So I'm Kathleen Grant. I'm the Fiscal Policy Manager here at DTSC, and I'd like to talk to you today about the May revised proposal the administration put forward regarding the generation and handling fee shortfall. Next slide, please. In the first year of SB 158's implementation, we identified a revenue shortfall. And over the last year, we've conducted a pretty thorough analysis of the shortfall and identified 3 significant contributing factors. First and foremost, DTSC does not have the necessary data to oversee generator compliance. What we found is that both DTSC and CDTFA do not collect the data needed to reconcile the hazardous waste generated compared to the returns filed with the California Department of Tax and Fee Administration, CDTFA. We also identified that a handful of the exemptions for the generation and handling fee are being broadly and inconsistently applied amongst generators. And because DTSC and CDTFA have not historically collected data on exempt waste, we are not able to oversee the proper application of these exemptions. Lastly, more generally, there are substantial compliance issues with generators paying fees and paying fees on time. We identified that there is an 80% collection rate of generators paying the fees on the waste they generated, which means 20% of the waste generated, no fees are paid on. Also, of the generators, that 80% who do pay, about 35% do not pay on time. Next slide. To address these challenges, the department put forward a May revised proposal in which DTSC is requesting $750,000. $500,000 would be ongoing funding used to increase CDTFA's audit activity and implement the escalated penalty framework that we'll talk about on the next slide. Additionally, the remaining $250,000 of one-time funding would be used to develop an exemption review process and reporting oversight process, which we'll also talk about a bit more on the next slide. The proposal also includes a net reduction to the hazardous waste control account by about $5 million. So even with the increased contract dollars previously referenced, the department is actually proposing to reduce our expenditure authority by that $5 million. And then, as noted earlier by the board, DTSC received $55 million in loans this year. $40 million came from the Beverage Container Fund, and $15 million came from the Toxic Substances Control Account. In our May revised proposal, DTSC is requesting forgiveness of the smaller $15 million loan. Lastly, we are requesting a build-out of DTSC and CDTFA's oversight abilities in order to increase fee payer compliance. Next slide. In order to implement this proposal, DTSC has proposed numerous statutory changes through our trailer bill language. The trailer bill would mandate DTSC to adopt regulations to implement an exemption review process for the claimed exemptions, as well as reporting requirements for hazardous waste generators. The bill language also clarifies the fee exemptions so that they're able to be consistently applied and aligned with the intent of reform. So, for instance, it clarifies universal waste is exempt from the fee, as was originally intended in reform, though not explicit in statutory language. It also standardizes the on-site treatment exemption to be applicable to both locally and state permitted facilities. This proposal, the bill proposes to replace CDTFA's existing 10% flat penalty rate with an escalated penalty rate based on delinquency period. So a generator who pays 6 months late compared to a generator who pays 1 month late would pay a higher penalty rate, whereas right now a fee payer only pays 10% plus interest regardless of their delinquency period. The department is also seeking emergency rulemaking authority on fee and reporting related regulations. And this is to allow the department to implement these reforms to SB or to generation and handling fee within the next fiscal year. We are also seeking to clarify that CDTFA can continue to collect on unpaid fees from the previous fee structure. And lastly, we're proposing various technical statutory changes, such as reporting period standardization. So, for instance, this year, the 23-24 fiscal year, fees are due on calendar year on waste generated in calendar year 2022. CDTFA's notice currently refers to a December 2023 reporting period because the Revenue Tax Code states annual return, whereas Health and Safety Code makes clear that the fees by fiscal year. So we're seeking to standardize and make consistent both the Revenue Tax Code with the Health and Safety Code. Next slide. So with all of this, there are numerous benefits to our proposal. Overall, it's consistent with the structure and intent of reform, which was to create a sustainable and equitable fee structure that adequately funds our department. It establishes various compliance measures to make sure fee payers who should be complying with fees and reporting requirements do, including the consistent application of exemptions. And this will ensure equitable distribution of costs to all generators. It also keeps HWCA solvent, avoiding significant cuts, backfills, and additional loans. With the provisions outlined in our proposal and the trailer bill language, DTSC expects revenues to grow in the out years as compliance measures are implemented and fee payer behavior changes. So to talk more about revenues and their impact on our fund conditions, I'll turn to our CFO, Brian Brown.
Thank you, Kate. Again, Brian Brown, Chief Financial Officer for DTSC. Nice to talk to you all this morning. So yes, given the May revision, what I want to do next is talk to you a little bit about what the implications of the May revision are for the fund condition statements for the different funds in which the fees are deposited. Before I go through those, probably worth just mentioning a little bit more about what a fund condition is and how it applies to fee setting. Board Member Bhatia did speak to this a little bit, but let me add just a little bit more. So what a fund condition statement is really just our way of, a standard way of kind of accounting for any fund, how much money is available based on how much revenue comes into the fund and what revenue or what transfers and expenditures go out of that fund, so that you can then see at the end of the day how much money is left over. And are you in the red or are you in the black? Or do you have a negative fund balance at the end or a positive fund balance? In some ways, it's sort of like balancing your checkbook. Now, this process of developing a fund condition statement and updating it periodically is really critical for supporting the board's fee setting process, because ultimately the first step is to look at that end of the year projected fund balance to see whether it's positive or negative. If it's negative, in other words, if you have less money, if you have a negative amount of money available, if you have less money available than your expenditures would allow or require, then that implies that the board would need to increase fee rate to generate more revenue and have a positive fund balance. On the other hand, if we're projecting a positive fund balance at the end of the next fiscal year, then the board would want to consider whether that's a sufficient fund balance, in which case maybe fee rates would just stay the same, or they might consider alternatively, would they potentially increase fee rates in order to build a larger reserve up to that 10% reserve cap set in statute? Or alternatively, they could even consider whether they want to reduce fee rate, perhaps because the projected fund balance exceeds that 10% limit. So again, I'm going to walk through in a moment all three of the funds in which the three fees are deposited. I do just really quickly just want to add the caveat that for each of these numbers are still very preliminary. It is early. We haven't reached the end of the fiscal year. There's still more information that will come forward, and I'll talk actually about that just a little bit more detail in a moment. But bottom line, as we walk through each of these at a high level, I'll really draw your attention to that bottom line number, the projected fund balance at the end of the next fiscal year, the 24-25 fiscal year. And you'll see for each of the three fees, for each of those three funds, you'll see a negative number, implying for each of them that a fee increase based on today's current data would be necessary to bring each of those funds in balance. Now, that's somewhat to be expected, and that's sort of how SB 158 designed the fee setting process, was an acknowledgement that as costs grow from year to year, just due to whether that's because of budget changes or just normal inflationary pressures on salaries, wages, benefits, and such, that there will be a process for adjusting fees accordingly. So with that, why don't we move to the next slide, and I'll show you the May revision. Oh, some formatting issues here, I apologize. With the hazardous waste control account. Yeah, we've got some formatting issue here that seemed to have cropped up. I apologize. You can't see it, or at least on my screen, I can't see it, but What this what this would show is if you look in the final column, the 24-25 column, the final row would show the estimated year-end fund balance, and it would show roughly a negative $7 million. In other words, there would need to be an additional $7 million generated from fees next year to keep the fund just in balance, to keep it from being negative. I do want to note this assumes current generation and handling fee rate, but does assume the adoption of our May revised proposal that Ms. Grant spoke to a few minutes ago. And so that if that wasn't adopted, then the negative fund balance would be even greater. Next slide, please. Oh, goodness, we have same problem with this one. I apologize, folks. Maybe we can get this corrected before we post it later. So this one is a hazardous waste facilities account. This is the account into which the facility fee is deposited. And again, you can't see it unfortunately, but the bottom line, the year-end balance for 24-25 fiscal year shows a little over $1 million negative fund balance. So again, the idea would be that the facility fee would need to be based on current data, which will be updated. The rate would need to be adjusted to generate a little over $1 million more next year to keep this fund in balance. Next slide, please. Okay, same problem here. So this is the toxic substances control account. This is the fund into which the environmental fee is deposited, and the year-end projected fund balance for this fund is a negative between $6 and $7 million. Now, what's maybe just a little bit different about TSCA, this account, is that the governor's budget as proposed does include a few proposals that actually increased our expenditure authority next year from this fund. That includes additional funding of about $7 million associated with our cleanup of state and federal orphan sites. And then it also a couple $1 million in total for a couple of other proposals related to climate resiliency, and also with oversight of cleanup activity in the Bay Area, where we've seen significant increases in workload. All those proposals, just so you know, are available for public viewing on the Department of Finance's website. Next slide, please. So given those fund conditions based on the May revision, again, they imply that for each of the fees, there might be a need for the board to increase rates this coming cycle to keep those funds in balance. That said, I do want to emphasize again that the data presented is still very preliminary for a couple of reasons. The first is that the final budget act for the 24-25 fiscal year is not final. Once that is finalized, that'll provide the final appropriation or spending level available to DTSC. And so if there are any adjustments to that in the final negotiations between the governor and the legislature, we'd want to make sure we took that into account. Moreover, the governor's May revision included a couple of statewide proposals that involves budget reductions for all state departments. We're still awaiting more information on how those will specifically impact DTSC, but they do relate to reducing spending authority associated with vacant positions, as well as just general state operations. And so if those are adopted, we would want to account for those reductions in our projections that we provide to the board. Of course, very important is decisions need to be made by policymakers regarding our generation and handling fee proposal, May revised proposal. As I noted earlier, if that proposal is not adopted in the final budget act, then that would put additional upward pressure on the generation and handling fee. And then lastly, I just note that we have not yet concluded the 23-24 fiscal year. So we will be going over the next couple of months through the process of identifying what our final expenditures were for the current year. We also look at updating prior year expenditure estimates, as well as looking at revenue data. So updating prior year revenue data and current year revenue data, all of which becomes important because it then affects the amount of funding we estimate available at the end of the current year that will then roll over in the fund available for next year. And so ultimately what we will do is over the next couple months as we get more decisions made on the budget itself and we have more data, updated and finalized data on expenditures and revenues, we'll be providing that to the board so they have updated information as they go through their fee setting over the next 2 months or a couple months. So with that, I will pass it back to board member Bhatia. Thank you.
Thank you, Brian. First of all, apologies that the fund condition statements were cut off in this version. The materials that will be posted on the website and the recording will make sure that you have the full fund condition statement that's viewable through the text we post on our website. So please look out for that. Number 2 point is we've tried to make this as consumable as possible for folks that don't have deep finance or accounting expertise. But the topic of fees is inherently very complex, and that's what you're starting to see, that we are grappling with information that's continuing to come in, and it's there's many different funds and fee considerations we have to take into account. But the good news is I'm happy to report that we are not doing a surprise pop quiz today to ask you all about May Revise or TBL or any of the fund condition statements. And we'll just go straight into some of the considerations we are keeping in mind as a fee subcommittee and that we're taking to the full board. Okay, next slide. Okay, quick summary here of what we heard so far. Early in the presentation, we spoke about all of the factors we need to consider as a board. Of those factors, some of them are known to us and some of them are not known until the end of June, middle of July. So recapping the knowns, we know that there is a generation and handling fee shortfall. This year, we know that there's a structural deficit issue specifically in the generation and handling fee category. We know that we have a loan to repay. We have to make cost of living adjustments on an annual basis, and we didn't make one last year. And we also have to begin to accumulate and maintain a prudent reserve to protect us from future uncertainty. So all of these are known. In terms of the unknowns, we spoke a lot about the trailer bill, and our estimates that we shared earlier were based on the assumption that the trailer bill would pass. So we still have to wait for the fate of the trailer bill and the statutory changes that are intended to reduce the deficits in the future years. We need to wait for that. And then number 2 is we don't know the exact amount of the cost of living increments. So we're making some assumptions in the scenarios we're going to present to you in the next slide. Okay, so I'm going to give you some caveats before I walk you through what's on the slide. So given all of the unknowns that I shared earlier, we are presenting 2 scenarios for you, the broader board, to consider. The 2 caveats here are, 1, these are very preliminary because a lot of assumptions have been built into them. That's the first caveat. The second is we are thinking about these scenarios as bookends. Bookends being the lowest level of fee rate increase that we might need to consider for the next fiscal year, and the highest level of fee rate increase we might need to consider, given all of the unknowns. Okay, so this is preliminary, and these are bookend scenarios. In the end, we might end up with either of the bookend scenarios or something in between. Orienting you to the table, the column on the left has the 2 scenarios of scenario A and scenario B, and the column on the right has the specific generation and handling fee increase per ton, along with the total fee amount we might consider under each of these scenarios. Okay. Scenario A, that's the row in the middle, assumes that the trailer bill passes and that we as a board have to only make adjustments for cost of living. That's what COLA stands for, cost of living adjustments. and that we begin to accumulate a small reserve. Okay, that is scenario A. Under the scenario A, we would increase the fee rate by roughly $15 a ton, and the total fee amount is expected to go up to roughly $64.25. Scenario B assumes that the trailer bill does not pass. So we have to factor in loan repayment, we have to adjust for the structural deficit, we would have to make cost of living increases, and we'd have to possibly begin to accumulate a reserve. Under that scenario, we may need to increase the fee rates by just over $49 a ton, and the fee rate would be just over $98. These are the two bookends on the table at this moment in time based on the information we have. Next slide. So earlier in the presentation, I spoke about how there are actually 3 different fees, and we've spent a bulk of our time talking about generation and handling fee, given the very large sort of shortfall and the structural deficit we have uncovered in G&H. Today, we're actually not sharing multiple scenarios for the facility fee or the environmental fee, because these fees are somewhat closer to the ballpark of our projections, and we have not seen a pattern of structural deficits. We know that we will need to make cost of living adjustments, but again, we don't know the exact amount of the cost of living adjustments. We know that we would like to start building a small reserve, and again, we do not have the exact information to be able to share with you today. Okay, moving to the next slide. So let's talk a little bit about what to expect next in terms of timeline and process. This is the overall fee timeline. We previously shared this with you in our other workshops and memos. The unknowns I mentioned start to become clearer to us through the Budget Act adoption, and that's the June bullet point you see here. We will discuss fees at our upcoming board meeting in July, so on July 17th. We expect to look at more refined fee scenarios for the full board to consider. And we expect to make a decision on the path forward in August. And post that decision, we move into rulemaking in September and notifications to CDTFA of the fee changes in October. With that, I'm going to hand it over to Evelyn.
Thank you, Member Bhatia. So with that, with these dates in mind, we'll now move into the Q&A portion of this meeting. We have just about 16 minutes for Q&A. And, as a reminder, we do, with the limited time, I know that some folks may have a lot of questions from the information provided today, but if we do not get to you, please submit your question to us via email. And again, that will be provided in the chat. To participate in the workshop, you may submit your questions using the Q&A function or via email, and then we will provide that to you in the chat. So I don't see any Q&As so far, and I don't have any questions in the inbox, but I'll wait a few moments in case any questions pop up. Sorry, I missed this slide. To participate in the upcoming events, we do have our June 15th, 30th Budget Act process. We also have a board subcommittee meeting that will be at our July 17th board meeting, as was mentioned by Board Member Bhatia. So more information on that soon. It will be posted on our website. And then the board will be adopting fee rates at the August 28th and 29th board meeting. And that information will be posted on our website in closer to that date. So keep an eye out for that. And we will be sending out e-blasts and reminders to all of that. So make sure that you're subscribed to our newsletters to get that information. Next slide, please. And here's the information on how to participate in today's workshop for the Q&A. I do see some questions that have popped up, so I will be directing those to Board Member Bhatia. The first question I see is the trailer bill going to also fix the treatment exemption for full RCRA permitted facilities, RCRA?
Thank you, Evelyn. I don't believe so, but I'm going to ask Brian to step in and answer the question. Brian, can you take this?
Oh yeah, I may even turn it over to Ms. Grant. I think this refers to the exemption that she spoke to briefly related to standardizing exemptions across state and locally permitted facilities. Kate, do you want to take that?
Yeah. So can you repeat the question? I want to make sure I answer it completely.
Sure. The question was, is the trailer bill going to also fix the treatment exemption for full RCRA permitted facilities?
Yes. So currently, the treatment exemption is only for locally permitted facilities. What we're proposing is to create consistency amongst both locally and state permitted facilities to both benefit from that exemption.
Okay, great. Thank you. The next question I see is, can you please provide further insight into the expectation that revenues will increase over time?
I believe this refers to the trailer bill and the provisions in the May revise that provide clarifications on exemptions and provide clarification on which facilities will be allowed to self-exempt, as well as other provisions to increase audits and increase ultimately the fee collection rates. I think with those provisions, over time, when implemented, the expectation is that the amounts of fee revenues collected by CDTFA would go up. Also included in May revise are a tiered penalty structure so that the penalties increase based on the scenario. And with those, the idea is that escalating penalties will increase the compliance rate. So again, all of these provisions are expected over time to work collectively to increase revenues. DTSC team, would you like to add anything to this?
Yeah, that's 100% correct. And I think just to even just add on, I think the expectation is that in the short term, it'll take some amount of time for DTSC working with CDTFA to increase, to implement these changes that we're proposing. Some of them require regulatory changes. Some of them require changes in the collection of data. And so just trying to be realistic about, we won't achieve all those revenue benefits from the enhanced oversight mechanisms right away. That'll take some period of time to get those implemented, and for fee payers to better understand their responsibilities and in some cases change their behavior accordingly.
Okay, great. Thank you. The next question I see is, what is the proposed escalated penalty rate? 10% per month late. So 6 months late will be a 60% penalty.
DTSC team, can you take this one?
Yeah. So the penalty rate actually goes from currently 10% up to 100% if you're delinquent after 4 months. And that is so that the department, because revenues are not collected until November and February of each year, and because over 30% of our generators pay in the next fiscal year, the penalty rates would actually essentially go up to 100% in order to compel generators to pay on time and within the fiscal year the fees are due.
Thank you so much for that, Catherine. The next question is, if you know the data ratio of firms that have paid 80% and 20% not paid, you must know who has not paid. What is being done about going after those 20%?
I will kick off the answer and then hand it over to DTSC to add more. So yes, there is data available between CDTFA and DTSC's systems, tracking systems on who the non-payers or underpayers may be. There are some solutions being implemented to address this issue. One solution is around communications to make sure that the fee payers understand what fees are actually due to DTSC based on their operations and the data we have about them in our records. The second is auditing. So we have to make sure that collectively CDTFA has enough resourcing to be able to audit those businesses and accounts and ensure that the fees are collected. So both of these solutions are being implemented at the moment. And then Brian, do you have to add? Sorry, DTSC team, do you have more to add?
Yeah, no, that was right. I'll just add a little bit more. You're right. There are some things that we've already begun implementing this year with our existing authority. Some of that has to do, as the board member mentioned, with our outreach to fee payers. We've done more direct communication this year and plan to continue that going forward. So it's really clear to everyone who is responsible for filing with CDTFA and submitting fee payments to them, registering, or in EVQ, or data, or essentially a registration system for generators. We've also been engaged this year. We've tried to do more workshops such as this one. We had one in January, for example, prior to the first fee, the February fee payment being due for the generation and handling, trying to do more of that outreach. We also have been working with CDTFA to improve the data. One of the challenges we've had analytically in doing oversight has been that the data that's collected by CDTFA on fee payers and fee payments is one data system, and that's a separate and distinct data system from ones that DTSC manages and maintains related to generators and related to hazardous waste generation. And those systems were designed independently and not designed necessarily to work together. So the act of doing that sort of reconciliation to determine who's paid and hasn't paid is really very manual and very difficult. So we're implementing already some different data improvements to make that easier. That'll enhance our ability and CDTFA's ability to go out and do effective oversight and enforcement of the fee. And then, of course, with the trailer bill as proposed, that adds additional enhancements to ensure that those who should be paying are doing so. That 20% of non-payer, and as Ms. Grant mentioned, the additional 35% that have paid late. And so some of that is related, for example, to the higher rate of penalties, so that the 10% maximum penalty is simply insufficient we believe, to compel on-time compliance based on the high non-compliance rate. I don't know, Kate, was there anything you wanted to add to that?
Yeah, I did want to also note, many of you probably recognize that the return process was updated this current year. And that's really, the fundamental idea behind this was at the EPA site ID. Well, let me just back up. CDTFA payments are done at an account level, but hazardous waste generation is done at an EPA site level. And so historically, we have not had that nexus to marry the EPA ID with the CDTFA account. So beginning this fiscal year with the 23-24 return, CDTFA updated their return process. And now generators have to report at the EPA ID level, total hazardous waste generated, exemption with the net calculation for what the total amount of fees due. And so we have implemented some improvements so that we could better marry those data sets and do that reconciliation. That being said, even regardless of these improvements, CDTFA continues to collect and administer our fees, both pre and post reform. They do send notices to non-payers, and they do audit and perform, oversight activities. But the challenge is the data collected just historically has not sufficiently married together like they are starting from this fiscal year moving forward.
Thank you so much for that. The next question I see is the TBL, or the trailer bill language, is open-ended with the respect to the look back for hazardous waste generated before 2022. Can clarifying language be added to indicate generators that previously complied need to do nothing, no return required, regarding the look back added in the TBL? As is written, it seems to require all prior generators going back forever to provide proof they paid the facilities fee, which I understand is not the intent.
DTSC team, can you take this one?
Yeah, I'd be happy to. Yeah, this is a good question. We've gotten some of this feedback as we've been engaging with different stakeholders about our draft trailer bill language, and just to start with, the intent of the language is simply to provide clarity that CDTFA still has authority to collect on any delinquent, non-paid of the old fees that the generation and handling fee replaced. That they still have authority to do so, even though those fees have been repealed and are no longer active fees going forward. We've heard the feedback from stakeholders that, in their view, the language is either ambiguous or might somehow be misinterpreted. So we've taken that feedback and we're looking at that language more closely to make sure that the intent and the language is clear and consistent with that intent as stated.
Thank you. The next question I have is, can you elaborate on reporting standardization? Earlier, we had suggested aligning invoice generated from CDTFA website to be more logical.
I'm going to ask the DTSC team to answer this one as well.
I'll take that one. So DTSC doesn't have control over how CDTFA system works. They do base it on an account where generators have to register their business and then register for business activity, since that account can be used to pay multiple taxes at a time. So what DTSC is looking to do is actually make explicit our various reporting requirements. And that's really to enhance the data quality that we get, that we then can provide to CDTFA for collection. So what we're looking to do is to formalize a process to make explicit we have reporting requirements. And then also, if generators fail to report, have some compliance measures in place to ensure that they're reporting their information timely. So we intend to promulgate regulations on this to make explicit the roles and responsibilities of a generator. I don't know, Brian, if you have more to add. Okay.
No. Okay. So that does put us at time for the workshop, unless I hear from anyone else. But we will be recording the rest of the questions and get back to you with a response. So again, if we didn't get to your question, please email us at besinfo@bes.dtsc.ca.gov, as you see on your screen and in the chat. Next slide, please. I'll go over some resources fairly quickly. There was a lot of information that was shared today and can be found online at the DTSC website, and also through the California Department of Tax and Fee Administration. Also has helpful resource guides on these fees on their website, and the links have been provided in the chat. There are also two helpful handouts available on DTSC's fees web pages related to the generation and handling fee and the environmental fee. Those will also be provided in the chat. Next slide, please. And for contact information, as we close this workshop, I'd like to thank our presenters for sharing all this information today. And I'd also like to thank you all for spending your morning with us. I'd like to thank Erin Gale, the board specialists with our board and our support staff from the California State University Sacramento staff who assist as our Zoom facilitators, Corin Chopin and Danessa Quintos. And a few final housekeeping items before we sign off. Today's workshop was recorded along with the questions submitted through the Zoom Q&A function. The recording will be posted in the next couple of days on our website. And as mentioned, we will correct a formatting issue in some slides before posting. And we apologize for that. If you missed the April 26th fees workshop, that recording is now available online and will be provided in the chat for your convenience. Again, if we didn't get to your question today, we encourage you to submit it to our email and we will follow up with you directly. The contact we shared earlier is on the screen again and will be shared in the chat one last time. As always, please reach out to us with your questions, comments, concerns. Is there one more slide? No, that's all. Yeah, if you have any questions, comments, or concerns, or any suggestions, we will follow up with you. But we want to thank you for your time and look forward to engage with you on this topic in the coming weeks and months. I hope you have a wonderful afternoon and a wonderful weekend. We'll keep the Zoom open just for one more minute in case anybody would like to copy the information in the chat, but that is all for today. And we will be posting this recording on the website soon. Thank you.